Have you ever wondered why a small group of people you will never vote for, never meet, and probably never hear about, hold the power to raise or crash the U.S. economy with a single announcement? Why interest rates suddenly spike? Why inflation eats your paycheck? Why recessions happen in waves? Why the dollar rises and falls like a roller coaster? And why, no matter which president is in office, the Federal Reserve keeps steering the money system from behind the curtain? Today, we're going to expose how the Fed was really born. Because its creation was not democratic, not transparent, and not even remotely as innocent as high school history books like to pretend. Its origins involve secret meetings, private bankers, political manipulation, and a financial panic so devastating it nearly toppled the country. And here's the real question we'll answer. How did a handful of elites quietly build the most powerful monetary institution on Earth? And why does it still control your money today? Welcome to Channel YouTube. Let's uncover the story America was never supposed to forget, yet somehow did. To understand why the Federal Reserve exists at all, we have to rewind to the 1800s. Back to a time when America had no central bank, no unified monetary policy, and no real way to stop financial disasters. Banks printed their own money. Yes, literally their own banknotes, with their own designs, their own promises, and often their own failures. This was the era of wildcat banking, where some banks were strong and trustworthy, and others collapsed overnight. Imagine having a wallet full of cash, but only some of it works in certain states, some only works near the issuing bank, and some becomes worthless if the bank goes bankrupt. This chaotic system led to waves of panics. 1837, 1857, 1873, 1893. And each panic had the same pattern. People lost confidence, ran to withdraw cash, banks ran out, entire regions collapsed. By the early 1900s, business leaders, farmers, factory workers, and politicians were all sick of the instability, but especially the bankers, because instability was bad for profits. No one knew it yet, but the pressure was building for something big, something centralized, something powerful. America was primed for the Federal Reserve.
Then came the event that changed everything. The Panic of 1907. It started with speculation, bad bets, market manipulation. The same things that spark crises today. When a major trust company collapsed, panic spread like wildfire. Banks tightened credit. Businesses couldn't borrow. The stock market plunged. People lined up around buildings, desperate to withdraw their savings. There was no Federal Reserve, no government safety net, no overseer to stabilize the system. And so the U.S. turned to one man, J.P. Morgan. Not the government, not Congress, not the Treasury. A private banker became the nation's emergency central bank. Morgan locked bankers in his library, forced them to negotiate, pushed them to pool billions in capital, and stopped the collapse through pure force of will. It worked, but it terrified the country. Americans suddenly realized, if one man can save the economy, then one man could also destroy it. The demand for a real, official, legitimate central bank exploded. And that leads to one of the most secretive stories in American financial history.
Here's where the story gets almost cinematic. In November 1910, 6 men, representing the most powerful financial institutions in America, boarded a private train leaving New Jersey. They traveled in disguise, using fake names. Even the staff wasn't told their identities. Their destination? Jekyll Island, Georgia. A quiet, private island owned by the elite, far from public eyes. Why the secrecy? Because they weren't there for a vacation. They were there to design a plan that would forever reshape American money. These men included Senator Nelson Aldrich, head of the National Monetary Commission, Paul Warburg, banker and monetary theorist, Henry Davidson, partner of J.P. Morgan, Frank Vanderlip, president of National City Bank, today's Citi, and others tied deeply to the banking elite. Together, they created what became known as the Aldrich Plan, the blueprint for a central banking system run by bankers but backed by the government. They wanted stability, liquidity, a lender of last resort, and a system that protected banks during crises. But critics saw something else, a plan to consolidate private financial power in a government-backed institution. When the public eventually heard whispers of the meeting, outrage spread. People didn't want banker control, especially after the 1907 panic. Congress killed the Aldrich Plan, but the story didn't end there.
Here's something fascinating. Even though Congress rejected the Aldrich Plan, most of its structure survived. All it needed was a political makeover. When Woodrow Wilson became president, he advocated for reform that looked democratic, more regional control, less obvious banker influence, and a system that appeared public-focused. But behind the curtain, many of the same concepts, the same frameworks, the same mechanisms came directly from the Jekyll Island blueprint. In 1913, during the busy Christmas season when many lawmakers were away, Congress passed the Federal Reserve Act. And just like that, the United States had a central bank. Not quite government, not quite private. A hybrid unlike anything else in the world.
Here's where things get interesting. Most Americans assume the Federal Reserve is part of the federal government, but that's only half true. The Fed is public at the top, Board of Governors in Washington, private at the bottom, 12 regional Federal Reserve banks, and structured to be independent from political influence. It doesn't need approval from Congress to make decisions. It doesn't rely on taxpayer funding, and its actions can immediately affect global markets. So what does the Fed actually control? 1. Interest rates. It influences the rates you pay on mortgages, credit cards, loans. 2. Money supply. It can create money electronically, billions, even trillions, with a keystroke. 3. Inflation. By adjusting money flow, it aims to keep inflation stable, though we all know how complicated that can get. 4. Employment levels. The Fed's policies can encourage job growth or slow an overheating economy. 5. Banking regulations. It oversees and audits major banks, ensuring the system doesn't fall apart. In essence, the Federal Reserve, born from panic, secrecy, and political maneuvering, became the engine that drives America's entire financial system. But with great power comes great controversy.
Let's fast forward through a century of turmoil. The 1920s and 1930s. The Fed struggled to understand its own powers. Its decisions contributed to the stock market bubble of the 1920s. And its failure to expand the money supply deepened the Great Depression. Millions lost homes, farms, jobs, and economists still debate the Fed's role. The 1970s inflation crisis. Prices soared. Oil shocks rocked the economy, and the Fed had to raise interest rates to painful levels, over 20% to stop runaway inflation. Entire industries froze, but the gamble eventually worked. The 2008 financial crisis.
For the first time, the Fed unleashed tools that had previously been unthinkable. Massive bailouts, trillion-dollar asset purchases, and near-zero interest rates. Critics said the Fed saved Wall Street and ignored Main Street. Supporters argued it prevented a second Great Depression. Then came the unprecedented stimulus. Trillions printed, interest rates at zero, and emergency programs everywhere. The result? Short-term rescue, followed by long-term inflation. Which brings us back to the present.
The Federal Reserve affects your life more than almost any government institution, even though most people barely understand it. It determines how expensive your rent becomes, how high your credit card payments climb, whether your savings lose value, whether the economy heats up or crashes down, how the dollar competes globally, and even how companies decide to hire or fire employees. The Fed isn't just an economic referee. It's the architect of the entire financial ecosystem, and it's not going away. But here's the big question people rarely ask. Was this the only way America could have structured its monetary system? Or was it simply the system that the most powerful people at the time wanted? The secret meeting at Jekyll Island wasn't just a quirky historical footnote. It revealed something deeper about how financial power works. Crises create opportunity. Elites design solutions. And those solutions often shape society for generations. The Fed was born from panic, crafted by bankers, smoothed by politicians, and sold to the public as stability. Maybe that was necessary. Maybe it wasn't. But the truth is undeniable. A small group of individuals built the framework that controls the world's most important currency. And that framework still shapes your paycheck, your debt, your savings, and your future.
So what does all this mean for us today? It means the Federal Reserve was not created by accident. It wasn't the result of a single law or a single crisis. It was the culmination of decades of instability, banker pressure, political strategy, and public fear. Its power was built intentionally, piece by piece, to serve as the heart of America's financial system. And whether you love the Fed or distrust it, whether you see it as a stabilizing force or a shadow government, you can't deny its impact. Understanding the Fed isn't just about economics. It's about understanding how power is built, how crises shape decisions, and how the financial world really works behind the scenes. Because the truth is simple. You can't understand the U.S. economy until you understand the institution that controls the flow of money itself.
If you enjoyed this deep dive into the hidden history of American finance, make sure to like this video, subscribe, and hit the notification bell so you don't miss future episodes. And let me know in the comments, should the Federal Reserve have as much power as it does today? Or is it time for major reform? Your voice matters more than you think. Thanks for watching Channel YouTube, where we uncover the financial stories that shaped America.